Welcome back to another insightful episode of Zaki Crypto Update. If you're passionate about staying on top of the latest trends and developments in the cryptocurrency space, you've tuned into the right place. Today, we're diving deep into one of the most intriguing stories in the crypto world right now, Shiba Inu. With its price recently plummeting by 25% amid a falling wedge pattern, many are wondering if Shiba Inu is heading for further declines, or if this is just the calm before the storm, a storm that could see prices rallying back to $0.00002 or even higher. But before we jump into the details, do me a favor, smash that like button, hit subscribe, and ring the notification bell so you never miss out on our latest updates. Let's get into it. August 2024 has kicked off with a wave of bearish momentum that swept across the entire cryptocurrency market. After Bitcoin, the market leader, took a sharp nosedive from its recent high of $70,000, the ripple effects were felt far and wide. The downturn wasn't just about numbers on a screen, it was fueled by a cocktail of market fear, uncertainty, and doubt, often referred to as FUD. And if that wasn't enough, geopolitical tensions in the Middle East have added another layer of complexity to the already volatile market. Meme coins, including our focus for today, Shiba Inu, have been particularly sensitive to these developments. Unlike more established cryptocurrencies like Bitcoin or Ethereum, meme coins tend to exhibit extreme volatility. They're often the first to react when the market sentiment shifts for better or worse. Over the past few weeks, Shiba Inu's price has been on a downward spiral, and it's been a rough ride for investors. Let's break down what's been happening with Shiba Inu specifically. Over the last 2 weeks, Shiba Inu has been caught in a falling wedge pattern, a classic technical setup that many traders keep an eye on. This pattern is formed by two downward sloping trend lines that converge as the price moves lower. Essentially, the price action is being squeezed into an increasingly tight range, creating pressure that often precedes a significant breakout. During this period, Shiba Inu's price has seen a substantial decline, dropping from $0.0000002 to $0.0000015. That's a 25% drop. And it's not just the price that's been affected. The market capitalization of Shiba Inu has also taken a hit, falling to $8.81 billion. This decline in market cap is a clear sign that investors are losing confidence, at least in the short term. But the story doesn't end there. There's another crucial piece of the puzzle: open interest OI and Shiba Inu futures. Open interest refers to the total number of outstanding derivative contracts, such as futures and options, that have not yet been settled. It's a key indicator of market sentiment, as rising OI generally suggests that traders are betting on continued price movement, either up or down, while declining OI indicates a lack of conviction. In Shiba Inu's case, OI has dropped from $53.5 million to $32.78 million, a 38% decrease. This sharp decline suggests that traders are either closing their positions or staying on the sidelines, waiting for clearer signals. It could be a sign of broader uncertainty or a shift in sentiment as investors reassess their strategies in a volatile market. Now let's talk about the Bollinger Bands, a popular technical analysis tool that's particularly useful in volatile markets like this one. Bollinger Bands consist of three lines: the middle band, which is typically a 20-day simple moving average SMA, and the upper and lower bands, which are set 2 standard deviations away from the middle band. These bands expand and contract based on market volatility, and they're often used to identify potential reversal points. Currently, Shiba Inu's price is testing the lower boundary of the Bollinger Bands. When the price touches or crosses below the lower band, it usually indicates that the asset is oversold, meaning that it might be due for a bounce. However, in a strong downtrend, prices can ride the band, continuing to decline even as the asset remains oversold. This is why it's crucial to consider other factors such as volume and trend lines before jumping to conclusions. In Shiba Inu's case, the price action suggests that sellers are currently dominating the market. The selling pressure is strong, and if it continues, we could see Shiba Inu drop another 35% to reach the lower trend line at $0.000000095. This level would be significant as it could serve as a crucial support point, or if breached, could signal further downside potential. Despite the bearish indicators, there's a glimmer of hope on the horizon. One of the most important aspects of technical analysis is the relationship between price and volume. Typically, strong trends, whether up or down, are accompanied by increasing volume. Conversely, when volume begins to decline, it can be a sign that the trend is losing steam. Over the past few days, the decline in Shiba Inu's price has been accompanied by reduced trading volume. This decrease in volume suggests that the selling momentum might be weakening. In other words, while the bears are still in control, they're not as powerful as they once were. This could indicate that the downtrend is nearing its end, setting the stage for a potential reversal. The falling wedge pattern that we've been discussing is particularly relevant here. In technical analysis, this pattern is often seen as a bullish reversal signal, especially when it occurs after a prolonged downtrend. If Shiba Inu's price can break above the upper trend line of the wedge, it could trigger a significant rally. The previous resistance level around $0.000002 could flip into support, providing a springboard for further gains. It's also essential to consider the broader context in which Shiba Inu is trading. The entire cryptocurrency market is currently under pressure from a variety of macroeconomic and geopolitical factors. For instance, the ongoing tensions in the Middle East have created a climate of uncertainty that's affecting not just traditional financial markets, but the crypto space as well. Investors are skittish, and this has led to increased volatility across the board. Bitcoin's recent pullback from $70,000 has also played a significant role in shaping market sentiment. As the largest and most widely recognized cryptocurrency, Bitcoin often sets the tone for the entire market. When Bitcoin sneezes, the rest of the market catches a cold. This is especially true for meme coins like Shiba Inu, which are highly sensitive to changes in market sentiment. Given all these factors, what can we expect from Shiba Inu in the coming weeks? The technical indicators we've discussed suggest that the current downtrend might be losing steam, and the falling wedge pattern is hinting at a possible reversal. If Shiba Inu can break out of this pattern and reclaim the $0.00002 level, it could pave the way for a more extended rally. But it's important to remember that in the world of cryptocurrency, nothing is guaranteed. While the technical setup is promising, external factors such as market sentiment, geopolitical developments, and macroeconomic trends could all influence Shiba Inu's price action. Traders should keep a close eye on key support and resistance levels and be prepared to adapt their strategies as new information becomes available. To sum up, Shiba Inu is at a critical juncture. The recent decline has been steep, but the technical indicators suggest that a reversal might be on the horizon. If the price can break above the falling wedge pattern and overcome the current selling pressure, we could see a rally back to $0.00002 and potentially higher. However, traders should remain cautious and stay informed about the broader market conditions. If you enjoyed this deep dive into Shiba Inu's price action, don't forget to like this video, leave a comment with your thoughts, and subscribe to Zaki Crypto Update for more in-depth crypto analysis. As always, stay tuned, stay informed, and stay ahead of the curve in this fast-paced world of cryptocurrency.